Welcome to Daily Tax Minute. This is Tony Novak here to share a few points on how to stay out of tax trouble. Today's topic is missing health insurance information. And let's dive right in. So the situation is that some individual taxpayers receive a subsidy, a federal premium subsidy to purchase their health insurance, and those that do are required to reconcile that amount when they file their tax return. I've noticed some people don't even know that they're receiving a federal health insurance subsidy. In other words, other times it's just a matter of forgetting about it. But the point is, when it comes time to file a tax return, sometimes that information is missing. Now, if you go on the IRS website and read their materials, it sounds like anybody can get that information. It's very easy. Just make a phone call and you can get it. But all of us in tax practice know that that's not always the case. There are circumstances where it's very difficult to trace, and individuals are missing information, and years sometimes go by, and you're filing for a tax return year that perhaps the health insurance company or the health insurance exchange doesn't even keep the records online anymore. It can be difficult. So in that case, if the information is missing and you go to file your tax return, it's going to, the IRS is going to reject your electronic filing of your tax return and say, hey, you're missing your health insurance reconciliation. So the first obvious question is, well, if they already know, why do we have to look it up and find it if the IRS already knows about it? It's a very valid point, and it's actually ridiculous that we have to do this, but that's the way it's set up. So in that case, we have three options. One is our electronic filing was rejected. We can take the same filing, print it out on a piece of paper, put a stamp on it, and mail it in and hope for the best. That's not a scenario or approach that any tax professional is going to recommend. We want to avoid doing that. We want to electronically file and have proof of filing immediately, not send the return into a void where, remember a couple of years ago, they actually threw away many tax returns that just didn't even open the envelopes. They were just thrown away. So we don't want to do that. That's a bad option if we can avoid it. Second option is to get the information from IRS. We already said IRS already has this information. They already know the amount of your premium subsidy. We can get that information. However, for me as a tax professional or any tax professional, to have us take power of attorney, contact the IRS, probably multiple times, probably over a week or weeks until we get the information, that is going to significantly increase the cost of your return, at least double, triple, quadruple the cost of preparing the return. We don't want to do that. That's not a good option. The third option, which is mentioned in IRS publications and is always available, is to use the best information that we have to make the best estimate that we can. But here's the thing. An estimate is a number that is not an accurate number. Our tax return is going to be wrong. So what that means is the IRS is going to not immediately, quickly process a refund if a refund is due, but they're going to take their time and go over it. It's probably going to be delayed 6 weeks. So if you were expecting a fair refund, say in 2 weeks, it's going to be 6 weeks or 8 weeks because of the estimate that's used. Still, of the three, might be the best option. Would love to hear your thoughts, comments, or feedback on this specific topic or any other. I'm easy to reach on social media or contact me one-on-one, taxproblems.cpa. And I'll be back tomorrow with another Tax Minute.